following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. And we're taking a look at crude oil immediately. If I can get the ringing out of my ears, where's it coming from? It's coming from TFNN. Okay, it stopped. And people are watching me again. All right. I'm not paranoid. It's we're taking a look at crude oil. I was just kidding now. We're taking a look at crude oil and really kind of concerning actually. I hate it when this happens. And it's really we don't have my chart. Here we go. Everybody see my chart now? Yes, no, blah, 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 blah. You guys got it? Okay, cool. All right, so enough of the failed humor. Here we go. Crude oil, I'm scratching my head in case you don't see me. Look. God, I hate it when this happens. I hate it when we get down to these inflection points, bounce off, and then we just start crowding. It's not a pleasant feeling if you're trying to get long on these inflection points. And got a little bit of a bounce off of it yesterday, slightly, but this is our daily, and this is big number. We're going to go to the XLE, but this is the type of situation where it kind of ends up doing a little flush here. I've seen this movie before. I know you guys have too, but I'm not as excited about getting long crude oil against this 29.26 as I have been, because I don't like this consolidation situation down here. Am I willing to play the game still and get stopped out? Let's talk about that. Let's go into the XLE really quick. I was talking to some folks last night about this in particular and how, we were all feeling kind of rosy that maybe oil's not going to stay in the high 20s. I still feel that way, by the way. All right. But we could have a little bit. Man, my new haircut from Walmart is, I'm looking at it right now, is not looking smashing. We're all in the spirit of crude oil's not going to hang around the 20s. We're going to kind of get through this little bottom here and get back into at least the low 30s. I like the way the XLE might be foretelling that a little bit, making higher lows and then kind of holding its ground against this 54.13 bottom of the profile on the daily. And you've also got even a bigger kind of support situation down into 52.69 long term on this XLE situation. But again, crude oil could do a little bit of a kind of a short-term flush here against this inflection point. So watch out for that. Am I willing to kind of still play around with the long situation here? Yes, I am. This may be a situation if you're trading outright crude oil futures, you could have a little bit of a, let me make sure we're on the right. Okay. You could have a little bit of a disturbance here, possibly before we might reverse, but I really like how the oil stocks are kind of, all right, we're going to get through this. It's a little bit of an indicator in general. I like how crude oil's made higher lows here. I'm looking at this still as a floor, but again, to beat a dead horse about 20 times here, we could have a little bit of a flush before we reverse. So be prepared for that. And, those flushes can be extended if they happen. So again, make sure your stops are in and make sure you're prepared to get back in the game on the long side, in my opinion. Going to the weekly, we don't have any new profiles attempting to appear. Those flashes of magenta and making, this is another thing. I don't talk about that often because you guys don't have access to it in the scanner, but this navigator has kind of been making higher lows as crude oil made lower lows. All right, see right there. We had the magenta bars. They kind of disappeared now. But again, all this seemingly, even without a profile here in the long term, is an indication, and I know the world's going to hell in a handbasket economically, all that kind of jazz, which I really don't believe that. But these are all slight indications that we may be forming a bottom here on crude oil. Okay, so I've talked for 6 straight minutes about that, and we're going to move on. I want to go back to the XLE first really quick, though, and we've pointed out, probably bored you to death about some oil stocks that have kind of been just on the radar screen. Some of them have done 20%, 30%, 40% moves. I'm still a big fan of those stocks, and I'm still a big fan of buying those particular stocks on support. And if crude oil can get a little bit of a bid in it, you might see those things go a lot even higher. Now, looked at ExxonMobil. We always try to talk about things that might be in play here. We talked about ExxonMobil on the long term last week, and we talked about being able to try to catch a bid here, 73.29. One of the stocks that was kind of holding up, crude oil, looking like it was going to get a little bit of bid in it. It takes a lot to move this particular stock with the outstanding shares in it. We've gone from literally 73.5. What is that? 73. Yeah, 73.5. Up into 81. Amazing move, right? In 4 or 5 trading days. So here's the daily, and that 78.14 is a big number. That's combined with the POC on the weekly. Remember, that's the top of the hill. So we could get a retracement back into that area, and we've kind of already done that. But the targets on this particular stock, and remember, we're ExxonMobil showed the relative weakness on the way down with crude oil. It was not time to buy, not time to buy, not time to buy. And right now it started, kind of showing its hand a little bit, that it had some relative strength to it relative to crude oil. So again, ExxonMobil could be foretelling also a bottom in crude oil in general. Now, I'm going to go back to the dollar because that plays a role in all this without question. Kind of a sad situation here. We talked about, as that breakdown had happened below that 98.30 area, got the close below. We're going to go back and retest more than likely that 97.60 area, and that happened, I believe, yesterday. So the high was 97.50, 97.60 general neighborhood. I'm going to call that satisfied, and we're kind of trailing down from there. Remember, when we have a profile up here above price action, that's relatively bearish. And as the dollar continues to get weaker, we're going to kind of relate that to the price of crude oil when we come back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Credit Suisse. Okay. Hi, guys. Welcome back to the show. Just kind of look up a couple of symbols that somebody threw out in the den. So Credit Suisse. Wow. Let's pull this up. Ooh, ouch. Hadn't looked at this. No. The answer is no. Is it time to buy this? The answer is no. 1444. Let's see where we're at this morning. 1444. Hasn't printed. 1365. It looks like we have printed. Okay. All right. So here's the daily. You know, I don't see any reasons whatsoever to start stepping in with this. There's no new long-term profiles you at least want to see. And again, you know, this is another going back into this area. I hate to be a Monday morning quarterback. When we have profiles appear above price action, it's never good. I really haven't seen that not be the case. As many times as I've said that, it seems like it's happened true. And right now, here's our daily situation. Just nothing. You know, you had a little glimmer of hope here on the intermediate, not on the long term, getting back above 20 or so. That was kind of stomped out quickly. And now you just don't have anything to lean on. And really don't have any divergences going on with our long-term navigator. You do have quite a few magenta bars, but I'd like to see a new profile just like we always want to see new profiles when we want to try to have something to lean on and some new profiles at least attempting to appear. Let's take a look at DB, Deutsche Bank. If you're trading this on the long term, if you're day trading it, it's a different story. But if you'll see here, you've had, resistance points. You've had some disturbing little situations on the long side, on the long term back in August of 2015 and last spring. But since we started breaking down on profiles again and on the long term, we do have some magenta bars on Navigator. But again, we're trading 15-17, it looks like this morning. Is that the case? Yeah. Here's the daily. I just don't. long-term trend down, even when you have the intermediate kind of guiding that. Yeah, this is an ugly situation. I don't have to tell you that, but I don't, even looking at the 240s, I mean, how much has this regulated the trade down? So peak D, when you say thanks, does that mean, okay, Logan, we get it, stop talking, let's move on? Is that fair to say? It's not. You know what? You're playing with fire with these things. Bottom line is, I like to do a relative strength trading situation. I try to stay as attractive as some of these things are. Sometimes, like, wow, it's gone down 80% in, whatever, 142 hours. They can snap back, but you never know where the bottom is on these types of things. And American Airlines went below $1. Look what happened to Tyco. Back in the day. And I'm showing you how old I am now. Actually, this is a crazy story. Back in 2000, was it 2001? No, I'm sorry. 9/11. God, what am I thinking? I was in Chicago, and I was upstairs. And that day, I was downtown Chicago, and I stupidly just raced to the Board of Trade. But right after that, I mean, the airlines got killed, and then they continued to get killed. And I remember I thought I was getting a deal on American Airlines at like 1.5. And loaded up about 50,000 shares, bought another 100,000 shares, and I think I want to say it went to sub $1, but I can't remember. But I mean, things can get ultimately really dismantled. So you have to pay attention to that, especially when you have scares like this. I was just joking with you, Peak D. Above everything else, I enjoy hearing myself speak, so I'm just kidding. Okay, let's look at the S&Ps. I really I really enjoyed the way this thing closed yesterday. We closed around 1850 in that neighborhood. Here's where we are right now. We did a little bit more of a flush below that DMZ yesterday than I wanted to see, and I actually got stopped out of this. But I ended up getting back in when we started really getting some momentum past this DMZ. So I kind of broke even on this, playing around with it yesterday. But reached a low of 1821 yesterday. Right now we are in the vicinity 1834. That unfair low is at 1832.33 rounded off. I am still willing and not opposed to playing around with longs around down here. Again, I liked how we closed above that DMZ yesterday. We're kind of coming back and retesting it is kind of the way I'm looking at it. You do have some support. You do have a new profile here on the 240s. It's not exactly coinciding with it. And that's the way I'm looking at the S&Ps. I want to kind of relate that to the 10-year. And today you've got to kind of look around and look at the relativity trade, in my opinion. So we're looking at the 10-year. We're looking at the dollar. We kind of covered the dollar, but I want to kind of bring this all together in a couple of minutes here. I mean, as soon as I got kind of bearish on the 10-year, not bearish, but not really wanting to be long all the time. I've passed on trading above 128.28. I got a lot of people hit me this morning about questions from Asia, since the market's going to open, and we're going to cover Asia in just a second. So it's kind of a crazy day, and I apologize for that. But I've kind of opted out on longs above 128.28. Caught a decent little short 2 days in a row. A couple of days I was playing around with the shorts around that 128.28. So again, what's the 10-year going to do, and how does it affect the S&Ps, and how does the dollar come into play? That's the question. Here's the 240s. I think, in my opinion, you still got some decent support around 130.15 right now. So does that mean we have to explore this entirely? We don't have any signs yet. We don't have any new profiles attempting to appear. We had those the other day. They disappeared. Remember, they can disappear. We're going to talk about the 10-year and really try to nail down the dollar 10-year S&P oil kind of relationship right now. And I'm going to keep doing this with my arms. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. So we were kind of speaking about this 10-year, and we talked about, profile kind of getting stamped in there is a big deal in my book. It gives you some things to lean against. And also, in a move that's happening like this on the 10-year, gives it a chance to at least rest, in my opinion, and kind of find some balance points, if you will. And right now we just don't have that. But I'm looking at this kind of overextended move we had yesterday, and then we kind of had that lurching forward this morning and pullback. I really feel like the 10-year can pull back into this 130.15, 16 area. How does that relate to the dollar, the crude, the S&Ps of the world? Let's just kind of revisit the dollar for a second. This was kind of a cool situation after we broke down. Here's that 97.40 inflection point outside of the envelope here. There's the 97.60. We actually got into that DMZ 97.50. So we talked about the close blow, and then we always kind of, that retracement back up is a powerful situation after we put the stake in the ground that we've broken trend technically. That happened. So again, and here's the daily situation. We're kind of consolidating here. We could move lower. For short-term guys, you do have a little bit of a floor here to deal with on the dollar at 96.40. So what does this all mean? In my opinion, we're going to consolidate more down here on the dollar. I don't see any big moves going on right now in the dollar. And crude oil, I'm still a little bit more bullish than bearish. And here's the situation on crude oil. And we're kind of I talked about the precariousness of this thing kind of crowding this area on the lows down here. And you can get all these inflection points in the scanner itself. But, how does that affect the S&Ps? I'm still willing to take some shots down here around this 1830, even though we're sitting right on there. We're kind of flashing here, right on that 1833 area, bottom of our DMZ. I'm still willing to pick some battles there, put some stops in. And in my opinion, the 10-year is starting to look possibly a little heavy, even though we don't have that yellow flashing yet. That will be the clear-cut sign that it might be a target situation on the 10-year in the interim. And the S&Ps, all things considered, some commodities possibly repricing themselves. S&Ps could lift here, and that's kind of my general feelings on it. I know that our breadth, if you go to our long-term breadth, and this is the sad thing, is sometimes I go against my own logic. In the short term, I think we could possibly deserve a little bounce here. But if you look at the long-term breadth and you look at what's been happening here, our automated systems, I was going to get into that with Tom yesterday, the logic that's really the most successful, and you can't really argue with historical backtesting results based on closes. The most successful automated systems we have, and we're kind of putting them in an internal version of the scanner for me to kind of view every instrument using the overhanging leverage of the breadth itself on a long term to go long or short underlying instruments based on the underlying instruments inflection points. That is a very successful basket trading system, because what it does, if you think about it, is it goes long strong stocks on inflection points when appropriate on pullbacks, and opts out on weak stocks because those aren't really meeting those aren't candidates that are really meeting a lot of times breakouts on the long side, and or even pullbacks to inflection points that have been strong stocks in a kind of an uptrend support type mechanism. And it's exactly the opposite when the breadth turns negative. So in this instance, long-term breadth rolls over. We're supposed to be selling long-term inflection points and really, on a long-term basis, not really attempting to, try to pick battles like the one I'm explaining this morning. These are target-rich environments when we get down to these inflection points like the 1832, 1833s of the world. Those are just kind of short targets. They're not necessarily supposed to be back up the truck and buy. And when we look at situations like that, we want really the breadth to coincide. So these are trading opportunities on these inflection points. To get real confirmation on things like that, you want the breadth to really coincide, which means you want the internals to really coincide. On the close yesterday, we never really got breadth positive on our 60-minute, but I really like how this is acting. I'm willing to pick a battle in particular on this 1832-33 area while putting stops in, just like yesterday. Okay, who's Is somebody disagreeing with my investment analysis? If they are, I'd love for you to call in. This is something maybe we could all. I don't know who's writing that. Is that Captain Bob? But if that's directed towards me. Okay. All right. All righty. So, okay, Captain Bob, you know what? I like it when people comment. I like people telling me that they've got another opinion. It broadens my scope. So, guys, feel free. If I say something that is just, flat out polar opposite of what I'm saying, if you've got another opinion, man, please roll it out there. It might help me. and therefore might help other folks who are listening to the show. So I really, really welcome those types of comments because we can learn a lot from them. The Shanghai, now remember the Chinese New Year, this is kind of all on hold here. So thank God this thing's not going lower right now. It physically can't. That's one good thing. We got to hit gold really quick. Where do you guys take this thing off who have been long? There hasn't been any signs here. There's no yellow peelbacks. Okay. Okay, great. So where am I going? You guys mixed me up here. There we go. All right. So when we look at gold, we still got the same kind of, and by the way, when you look at these arrow ups, that means that we're in a balanced area, but we're still in an uptrend on this time frame. So, green across the board. Let's just take a look at it on the charts really quick. Okay, here we go. Here's the daily. And again, we've had no new profiles attempting to appear, but, you got a 240 here. And I want to just kind of backtrack a little bit. I've not been the biggest proponent of going long gold, and again, the way I look at some of these things is if I miss the trade, I'm still losing zero. We're going to take a look at this 240 situation and the possibility that we may explore this all the way down to 1175.5 when we come back on gold, but. Keep in mind the 240s are usually a really good regulator of the long-term move. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade
Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. I think we've got a caller, Dave from Maine. Are you there?
Yeah, I'm here.
Hey, man. How are you?
Very well. Good work. Really good work.
Thanks. What's happening?
Well, I was watching the action yesterday, and I've seen maybe some parallels in the rails, a couple of the rail stocks, Union Pacific,
Okay.
KSU, and I want to see what your little machine is saying.
Union Pacific. And again, these are just kind of first glances, not a lot of, and those are usually kind of the to be honest, in my book, some of the best ways of looking at things. Just first, not doing a lot of deep research. Going into the value line in the library and really doing a lot of fundamental research. I'm not. I think you got. I like how this. I like the action yesterday. Don't get me wrong. I think you've got a trading opportunity sitting from 76 to like 79.5, 80, and I think that could easily happen. Why is that the case? Because you kind of crowded this inflection point here around 76, Dave, and you've got 2 resistance points on 2 different time frames around that 79.50 to 80 area, and I think that could actually be explored. I don't know what you're looking to get out of a trade like this, but I think easily 4 or 5 points could be in order here.
That would, I'm a toe in the water at this point. I'd rather be a bear than a bull, but it's hard not to want to find some up trades.
Yeah. Well, the cool thing is on a relative strength standpoint, it has really, really fought the market the past couple of days, and I think that's extremely cool. So I'm not saying, in fact, what I'm saying is you've got this thing in a downtrend. There's no question about that. But we could meet that downtrend resistance around 79.5, 80. And I think you've got a nice little launching pad kind of feeling right now, fighting the market to actually reach that area before we have to start making some different decisions.
So to conservatively, just take a quick scalp here, you're saying 80-ish, 81?
80-ish, yeah, I'm saying 80-ish, 80 and a half, somewhere in there. And if the market can give it, if the market can do anything kind of north of just heading straight south like it's doing now, I easily think that could happen. But the good news is you've got the relative strength thing sitting here now. You've got an inflection point you can lean on to orient stops. And I think you could give it a little bit of noise and room and have a decent risk-reward scenario in your hands. I really hadn't been looking at this, but it's an interesting situation.
It is. KSU is the other one. You sort of have to pick your poison on one of these. And so I went with one.
What's the other one? What's the other one?
KSU.
KSU. Okay. Kansas City State. Or Kansas State, sorry. Kansas City State. That was smart. Okay, so yeah, even a much better situation. Obviously, this thing broke out, and this is kind of this thing. If you're looking at the chart, I don't know if you are right now. Okay, you see how this kind of crowded against this inflection point, and then kind of popped, and some people had to cover. That's kind of that UNP thing that we just looked at. Similar situation, but kind of on the other side of the profile. And when we kind of start getting above these inflection points, in this case, we have some people that just are on the wrong side. And what are your upsides on this? I think you've got 90, 84. That's obviously way up there. I like how this is, also kind of this sector is kind of fighting the trend right now. I think you've got a better trading opportunity on UNP, just because you've got a lot more defined situations to lean against. This one's kind of made the breakout. It's consolidated, and it's made another move up already. This one's obviously stronger than UNP, but I think UNP, you've got possibly a better trading situation for like a risk $1 to make 4 or 5. This one's kind of in a little bit of no man's land right now. So
okay, I'm in UNP, and I got its lower prices on shit. All right.
Great, man. Great. That's awesome.
The license for the software, is that how it works? Do you license it on a monthly or annual basis?
Yeah, no, we can do custom deals all over the place, based on kind of what, kind of long-term time frame you want. But strictly on TFNN, the scanner, I show the charts because on eSignal because I like to just for people to see our information on a really nice charting package. But that scanner really has everything baked in the cake. Everything that I'm looking at now, if I go into the scanner and I pull up, let me go back to our dashboard. Yeah, we lease everything on a monthly basis. Let me pull up UNP. So if I pull up UNP, I'm going to see all this, and we've been working through these charts. They're not the best charts in the world on here, but they're, this is not an end-all charting package. Here's, I've actually got a whole other charting package I can pull some components into, but this is kind of where we're at with this right now. Just to give folks some visuals, there's that daily, there's the weekly, and my vision was for folks not to really ever have to get a charting package, just to be able to use this, find opportunities, and then kind of see the visual. But again, I'm not. My personal situation, Dave, is I think computers. It's almost like you have to have evolved lately on the trading game so far, because computers on a very short-term basis are going to just kind of noise people out of trades. I mean, they're smart. They know where, day traders' thresholds of pain are and things like that. You got to be super disciplined, because they're gonna rattle around and just kind of shake people out with weird, random moves. I'm a bigger proponent and a bigger fan of just kind of waiting for longer-term setups, to unfold, let the scanner pick them out, and then kind of that kind of allows me to slow my trading down. So that's kind of, the scanner's kind of a piece of software that surrounds that concept.
Yeah, well, that's an important component of keeping it cool.
Yeah, yes, that's a great way to say it. But yeah, I mean, let me see here. You can get if you haven't gotten the scanner in a long time, I mean, this thing's evolved to a really cool piece of software. And before it was a little, in my opinion, a little lacking. You can go, if you have, you can go get another 2-week free trial. You can keep this thing on the radar screen. I've kind of, pointed out that some of the long-term views on the breadth are really things to be aware of. I'm a huge proponent of all the calculations that we do to produce these breadth outputs. But it's a stock picker's dream, in my opinion. So.
Okay, good stuff. Well, we'll be in touch. Thank you,
Dave. If you've tried to call me before, please try again. My hair was kind of getting pulled from a million different directions before. I'd love to talk anytime.
Yeah, this is you have to love it. I mean, when I was a kid, I used to go to the paper used to go to the stock section and not the funnies. You know, so it's that kind of a kid.
Well, man, I hear the music. Thanks for calling in, Dave.
Later.
Okay, man.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back. Dave, great call. Hope we answered a couple of questions there. You know, when stocks are trading down and in a downtrend like that, and they start showing their hand a little bit early, there are some trading opportunities there, but you know they can be short-lived. Those are the targets on things like that. Again, if you guys haven't looked at this scanner before, and I sound so excited, if you guys haven't looked at this scanner before, please go to the homepage of TFNN and try it again. Get a 2-week free trial. If you've had it before, just send TFNN a message. You want to try to look at this thing again. I think it gives some great information, keeps me out of trouble. And the thing that, if I could say one thing about it, and again, you know, we've talked about the dollar this morning. We talked about how that's kind of unfolded against these inflection points and the closes below. And then, you know, if I look at the dollar, case in point, as an example of what I'm getting ready to say, you know, here's the dollar. Wherever it is, there it is. It's red across the board. So what I was going to kind of circle back to about what the scanner really does for me is it keeps me from doing stupid things most of the time. Sometimes I break the scanner rules and do stupid things, but I can't even say any. I have no defense for that. But it tries to make it really black and white, or red and green, really, for that matter. For me, it blocks out one side of the marketplace, and it only allows me to kind of creep into that, reversal of that side of the marketplace if there's indications that it's okay to get back in the water. And right now, on the dollar, particularly, you don't have any green shoots here. You don't have any major inflection points that you're approaching right now. If you look at the level of the market, you don't even have any contra trade opportunities yet. So the scanner keeps me in a mode of, is it okay to be long, not okay to be short, or okay to be short, not okay to be long? I mean, I'm not the smartest guy in the world, and I need it really black and white for me. And if you have all these lines crossing in the screen, it's just a complete mess. As far as technical indicators and drawings and, all these, for me, this works. And for a lot of institutional guys, believe it or not, they're more concerned with raising money than they are with, spending a ton of time on trading. They want it black and white also. And a lot of those guys aren't trading by the tick. They look at the long-term, situations and try to move money around based on those, and slowing trading down in this day and time when you're competing against, on a very short-term basis, guys who have figured out to split the hair of a microsecond and get ahead of a trade in some dark pool. Those are tough situations to kind of overcome as a trader. I'm a big fan of kind of backing up and just, let's let somebody else figure out that part of it, and let's try to take advantage of higher probability situations around some of the major inflection points. I hope that makes some sense. It makes sense to me. If you guys have any questions whatsoever, always feel free to email me. And please, do yourself a favor to get take another spin at this scanner. I think you'll find it very interesting. It saves me money, and it also allows me to kind of move forward in a sane way. We got about 15 seconds left, guys. You really had some good questions today. We never really finished up about gold. I've been ashamed to say that Tom's been completely on the money, and I haven't, about this. The gold's in major inflection points again, 1176 on the downside. We could get a retracement back into that regulator of the trade up in gold before anything else happens. So be aware of it. We're at 1200. We could have a little bit of a move down here off that psychological number, so pay attention to it. You've been great. Larry's next. Stay tuned to TFNN.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.